Welcome to Conversations, a weekly audiocast featuring interviews with leading investment strategists and recognized financial professionals. Brought to you by the Market Technicians Association.
This is Conversations, the official MTA podcast series, and today's guest is Tom McClellan. Sherman and Marion's son, Tom McClellan, has done extensive analytical spreadsheet development for the stock and commodities markets, including the synthesizing of the four-year presidential cycle pattern. He has fine-tuned the rules for interrelationships between financial markets to provide leading indications for important market and economic data. Tom is a graduate of the U.S. Military Academy at West Point, where he studied aerospace engineering, and he served as an Army helicopter pilot for 11 years. In 1993, he left the Army to join his father in pursuing a new career doing market analysis. Tom and Sherman spent the next 2 years refining their analysis techniques and laying groundwork. In 1995, they launched their newsletter, the McClellan Market Report, an 8-page report covering the stock, bond, and gold markets, which is published twice a month. A daily edition was added in 1998 to give subscribers daily updates on their indicators and also provide market position indications for stocks, bonds, and gold. Their subscribers range from individual investors to professional fund managers. Tom serves as editor of both publications and runs the newsletter business from its location in Lakewood, Washington. Welcome to the program, Tom.
Well, Lance, that was a good long bio. That's probably all we have time for now, isn't it?
It is. You're an impressive guy, and I'm really glad we can have you on the program because you have come highly recommended from several of our prior guests. So thank you for making the time for us.
Well, it's a pleasure, Lance. What do you want to talk about?
Well, you know, the McClellan name is synonymous with market breadth, so I'd kind of like to go back to your childhood. Did you grow up on a steady diet of market breadth, just like fruit and vegetables?
I did. It was normal in my house to have, I grew up in Los Angeles, and long before FNN and CNBC and all the other networks, there was a local UHF TV station called KWHY in LA that ran stock market data and news, and so my parents had that on and followed the market religiously, and they were a precursor to a lot of the things that are now standard. They invented the scrolling ticker at the bottom of the screen. They'd say, let's go to the board to see how all the markets are doing. And in those days, the boards were these fixed kind of plywood things with odometer-style wheels that would turn and update quotes on wheat and pork bellies and all those things. And you'd hear them clicking in the background as the wheels were turning. And that TV station also had an interesting show hosted by a guy named Gene Morgan. It's called Charting the Market. And he'd come on half an hour after the market had closed, and he'd have charts. And he'd show that he did something amazing, which was to teach people that you could look at a chart and get information. You know, you have to remember this is the 1960s when most people that owned a chart book would keep it very well hidden so that their boss wouldn't see and they would get fired for, believing in voodoo or something, because that was how charting was looked at back then. But he showed people, yeah, you can look at a chart and you can get useful information out of it, and that was quite a gift. Way back then, really opened up a lot of people's minds to the idea that there was something to technical analysis.
So you grew up with this great base and foundation of the markets, yet when you left the house, you transitioned to the military with aviation. Can you tell me how your career changed and how you came back to the markets?
Well, everybody goes through a rebellious phase when they're in a teenager, and so for me that meant heading off to the other coast and going to West Point and becoming commissioned as an Army officer. And one of the neat things I got to do there is I got to go for a ride in a helicopter once, and I thought, man, I could get paid to do this. This is a great thing. So I was lucky enough to get to go to flight school and fly helicopters, first stationed in Washington State where I live now, and then I was stationed for 4 years in Germany, and then my last 2 years in the Army were at Fort Ord, California, which is now closed down and has turned into a college. But got to live at a bunch of different neat places and meet neat people and do interesting things. It's a kind of a curious thing. In talking to a lot of technical analysts, it's amazing that most of them have two things in common. Most of them have studied music at some point in their life, and most of them are somehow involved in flying and aviation. They got their private pilot's license. They did something. It's just amazing how many people you run into. Analysis
that's true. I was a pilot back in the 80s.
And I don't know what it is about the way that music organizes the brain, or I know for sure that flying an aircraft is definitely a visual experience. So you're used to taking in visual information and making decisions based on that. How to adjust the wings or how to land before the fuel gauge is at zero or whatever it takes. Pilots are very accustomed to visual information, and so that we don't have a trouble looking at a chart and saying, oh, I know what to do now.
So when you transitioned from aviation back to the markets, where did you decide to specialize?
Well, going off to West Point, I really wasn't involved with what my parents were doing with stock market analysis. They had invented the McClellan Oscillator back in 1970 when I was still a little kid, and had done some work on that, but gone in another direction for their careers, and I really hadn't been involved with that. And only later, when I finally had some money on my own to have to manage, I decided I better learn what my parents know and get a better understanding of this. I got out of the Army in 1993. Which, if you think back in history, that was when a bunch of smart new people came to Washington and declared that we weren't going to have wars anymore, so we didn't need this big army, and that turned out well. But they were saying that let's get the numbers down, and I could see that it wasn't a growth industry, and I had become much more interested in following the markets, and so I decided to pursue that as an avenue, and it's a much nicer way of living. You don't have to move around every 2 years, and you get to be your own boss and go where the work takes you.
So when you decided that you needed to learn what your parents learned, is that what you decided to specialize in? You just started as your base with the breadth work, and then
I had the privilege of having some really pretty smart parents who had done a lot of research and a lot of work, and I could pick their brains, and I could see what was interesting about the things that they did that was worth following, and what I could add to it on my own. And I still work with my father to this day. My mom passed away 10 years ago. She was actually a math major, and my dad was a business major. And so he was the one who was interested in figuring out what the market was going to do. But my mom was the one who had the skills back in the days before computers or even calculators. She could do all the tabulation of numbers on a big ledger, and then they could plot it on graph paper to make charts with. Had it not been for the combined talents of both of them, I don't think it would have ever gotten as far as it did. Now we can do it all on a computer, and it's nice. But back then, it was all get a ledger and do the calculations on scratch paper, and get out your ruler and your graph paper and plot some dots, and that was how you did it.
Now, I've seen some of your work, and I found it to be very original and fresh in a world where it seems like nothing is new. It's just kind of rehashed. Yours is often a breath of fresh air, and I often wonder where you come up with your ideas. And I'll throw an idea. I'll throw one of the things out there that I've come across and I've seen other people use. You use the commitment of traders report, and specifically the Eurodollar net long positions, and you just move that out into the future, and then you take that and you use it to forecast the U.S. stock market. And that's a really interesting application of that of the Eurodollar commitment of traders reports. How did you come up with that? How do you test that? How do you get comfortable with using something like that way?
Well, one of the byproducts of being a very visual analyst is when you stare at chart patterns all day, you start to be able to recognize them. If you show me a 2-year period of S&P 500 chart history anytime within the last 100 years, I can tell you when it was, as long as you give me enough of it to look at. I just have looked at them for long enough and stared at them and tried to figure out what they mean, that you kind of get to know where the landmarks are and what the geography is. When I first started looking at the data on Eurodollar futures, and Eurodollar is an interest rate product, not a currency product.
Correct.
I was looking at that as to give me some kind of indication of where short-term interest rates were going to go, because that's what Eurodollar futures are all about. It's trading which direction the LIBOR is going to go. Well, once I had seen what the plot looked like, I said, hey, I know that shape. That looks just like the S&P 500. And so I got them on a chart, and it didn't look quite right. So I had to play with alignment a little bit, and I found that when I shifted forward the data on the Eurodollar futures, it gave a pretty good leading indication for what the stock market was going to do. And just to clarify what I'm talking about, it's the net position of the commercial traders. You add up all their longs and all their shorts, and the difference between those is their net position. And that's what you shift forward to give you a leading indication for the stock market. Now, how did I get comfortable with it?
As opposed to large traders and the small speculators, the three people in the
commercials they're the biggest
right.
of the traders. They're the smart money. They're the gigantic banks. How did I get comfortable with it? Well, I just looked at a bunch of years of data and saw that it worked, and didn't always work perfectly, but it worked well enough to tell you a year ahead of time what direction the stock market was going to go. And so that got real interesting. I'm the kind of guy who likes to have the answers ahead of time. And then I also like to have some confirming tools to tell me, is it happening the way it's supposed to be happening? And that's a particularly important aspect right now, because last September, this is in 2012, right about the time when the Fed came out with their Jackson Hole Conference and announced QE Eternity, that relationship inverted. This great relationship, this great leading indication that had been working perfectly for years, giving us a one-year leading indication of what the stock market was going to do, it flipped itself upside down. Now, that was a hard thing to figure out right away, because you're not expecting that. But now that we've had a few months' time since then, and we can see, it looks better upside down than the correct way. It's a troubling thing to have a great leading indication all of a sudden flip 180 degrees on you, because something that's as fickle as would do that, once you get to counting on it working that way, well, it might flip back again. So it was a great while it lasted, but now I trust it a lot less. But there are other leading indications that we use. I'll look at anything if it's going to give me an indication of what's going to happen next. One of the other cool ones we look at is commitment of traders data on lumber futures. And you think, lumber? You're kidding, lumber? Lumber's a tiny little market. It's, I think, only 9,500 contracts total. It's just not a huge market at all. But if you look at the commercial traders' net position, and you shift that forward about 5 weeks, the stock market tends to follow in those footsteps really nicely. Mm-hmm. Now, that doesn't tell us everything that's going to happen, but if you know the general direction for the next 5 weeks, that's better than not knowing.
Sure. Well, you alluded to it. When you are out of sync with the market, and things just aren't going right, what do you do to get your feet back on the ground? If you're in your helicopter and you're all disoriented, you go to your instruments, you try to get it straight and level, to find that horizon again. What is that for you in the market? Do you have a few go-to tools that you use to get oriented again?
Sure. Well, the best condition of all conditions possible is to have a leading indication tell you what's supposed to happen, and then to have a confirming tool tell you that sure enough that is what's happening. Then when you have that going for you, you can trade much more confidently. Some people trade without any leading indication at all. They just go with the flow and flip back and forth with whatever the trend indicator of choice is telling them. I don't sleep as well at night that way. I'd rather know what's going to happen. But sometimes the market doesn't do what it's supposed to do, and you need to have some kind of indication that tells you what is actually happening. And maybe you lighten up on your positions and don't take as much of a commitment. Maybe you sit out on the sidelines for a while until things settle down and start behaving correctly. You don't have to trade every day. And when the market's not going your way, which happens to everybody, sometimes you got to just step aside and wait till it settles down.
Okay. I want to shift gears on you a little bit and talk about your experience working with your dad. Back in the old days, before the Industrial Revolution, fathers and sons would be able to work side by side together, in the agricultural society, working on the farm. But over the last 200 years, this experience has largely been lost. But at the McClellan house, you're one of the few families that have been able to have this experience. So can you tell me what it's been like to be able to work with your father? Well,
generally speaking, how lucky am I to get to talk to Sherman McClellan and pick his brain anytime I want to, and learn from whatever he can tell me. And he and I have a really good relationship. He kind of lets me have my own room to run and gives me insights as he sees fit, and we work well together. We carve out our own portion of the analysis task, and it's been wonderful. It's actually, you see it more than you think. Gerald Appel was the guy that created MACD. His son Marvin is now kind of taken over that business, and Jeffrey Hirsch took over the work that Yale Hirsch was doing with the Trader's Almanac. So it's not unseen, but it's kind of neat for me to get to do it. I feel like I'm a lucky guy to be in this position, and I try to take advantage of it.
Sure.
But having said that, I have strenuously avoided trying to convince my own two children that they should do it. If they do, that's fine, but it has to be their decision. And that was the way that my dad did it with me. He saw that I was interested in going off and being in the Army and flying helicopters, and only at the time that I was ready did he come to me and say, well, here's a couple of books you ought to read. And the first one was Edwards and McGee's Technical Analysis of Stocks Trends. And he said, you ought to subscribe to Investors Business Daily, or it was just Investors Daily back then. But reading that every day helps you learn the vocabulary and helps you understand things and get more immersed in it. So he did the proper thing, which was to wait till it was my choice and my decision to want to get involved. And I think that's a much better advice for any parent who thinks that they might want to have their kid involved in the same business with them.
And send them to military school first.
Well, and in doing it the way I did it, I'd gone off and had been adult and gotten married and had kids, and by the time we were working together again, there had been a significant enough break that there wasn't that awkward moment of, okay, are you still a kid or are you now an adult? Or it was a much more clean break and a re-engagement, and it worked out well for us.
Well, let me bring it back to your current market view. The markets have been, depending on what market index you're looking at, have been pushing up against or making all-time new highs. And CNBC, they've been wearing party hats and blowing horns, and everyone's really happy. But tell me what your market view is.
Well, there are a lot of tools that we use, but it's getting lately where you only need to use one tool, and that is whatever is the Fed doing, because the Fed they are driving the markets both for good or for bad. And so if you can figure out what the Fed is going to do and jump ahead of that, you can get ahead of the market. We saw the market did great coming out of the 2009 bottom when they did the first round of quantitative easing, and as soon as they shut off the faucet, we had the flash crash in 2010. And the Fed realized, whoop, we're not done, so they did QE2, and as long as that was going on, then we had a nice liquid market on nearly linear uptrend, and then they tried to turn off the faucet again, and we had 18% decline in the middle of 2011. The Fed seems to have learned their lesson and telling us that they're going to keep it going, and they're not even going to talk about when they're going to stop it. And for as long as that's going on, we have a very, very linear uptrend, and I'm the kind of guy who's seen enough patterns that I get really, really scared when I see the market go linear, because I know that linear is not a state that it can continue in for very long, and when you don't have corrections every once in a while to clean out the gunk that builds up, you get into real big trouble. I've made the analogy before to other people that what the Fed is doing is it can be likened to gardening a little bit. I'm an organic gardener. I like to have a big compost pile and mix the stuff in, and have worms and other fungus and natural components of my garden. What the Fed is doing is much more like hydroponic gardening, where you have the roots of the plant in this kind of gravel soil mixture and no organic elements, but you feed in exactly the nutrients that the plants need. Now you can get great results growing vegetables with hydroponic gardening, but if you ever screw up the mixture or if you ever turn it off, there's nothing left for the plants to survive on. We're now in a hydroponic market where it's all the Fed all the time as the lone source of liquidity with no reservoir of nutrients for the market if the Fed ever shuts that off. So we'll be unto us once the Fed decides that it needs to, because we're going to have to go through the accumulated and unendured pain that has been building up all this time.
That's an interesting analogy. Tom, where can listeners find you if they want to look at your research? Where are you on the web?
Well, if you Google Tom McClellan, I'm not that hard to find. Our website is mcoscillator.com. It's like a McNugget. It's a McOscillator. And they can find the value every day for the McClellan Oscillator there. We have a bunch of free content. We also have our subscription publications, but people can sign up to get a free weekly chart and focus email series that we call it. It's absolutely free. There's no strings. There's no junk mail. We don't solicit anything. We don't sell addresses. We just want to let people be exposed to some of the fun work that we do, and maybe you'll be interested in seeing some of the other work that we do. So once a week we send out a different chart on a different topic every week and go in depth on it and have some fun with it. So if you like charts, that's a good place to go.
Great. Well, our time is gone. Is there anything you would like to add before we go?
Oh, I'm looking forward to coming to the MTA Symposium April 4th and 5th in New York. Man, if you ever want to see Larry Williams and Tom DeMark and Andrew Lowe and man, a whole bunch of other great speakers all in one place, it's a once-in-a-lifetime opportunity. I'm not speaking there. I'm just coming as an attendee and hoping to soak up some of the accumulated wisdom from those guys, but it should be a good time.
I am looking forward to that as well. Looking forward to seeing you there. Thank you for your time, Tom. Today's guest has been Tom McClellan, and that concludes today's MTA podcast. From LexingtonCapitalLLC.com, I'm Lance McDonald, together with recording engineer Shane Skwarak at the MTA, reminding you that price is always right.